Hello everybody, this is Toni Turner and welcome to the market now as of about 1:30 p.m. Eastern on Friday, April 28th. Well, the Dow and the S&P 500 are lower so far today while the NASDAQ indices are higher. This morning GDP numbers showed the economy grew at its weakest pace in 3 years in the first quarter. Gross domestic product increased at a 0.7% annual rate, below the 1.2% rise estimated by economists, as consumer spending barely increased and businesses invested less on inventories. The NASDAQ Composite, however, opened at a record high today, propelled by earnings beats from Amazon and Alphabet, and the Composite is on track to post gains for the 6th straight month. The S&P and the Dow are also set to end the month in positive territory as the corporate earnings season continues to impress investors. And now let's go on to 3 charts that should give you some insight into the week to come. First of all, we're going to look, as we usually do, at a daily chart of the S&P 500, symbol SPY. When I captured this chart today, the SPY was trading at $238.23. It is now back above its 50-day moving average, the green line, and the 20-day moving average, the red line. It is, of course, above its rising 200-day moving average. All of these are simple moving averages. Now, as we know, the SPY made an all-time high on March 1st at $240.32. It edged lower from there, gradually falling last week and the week before below its 50-day moving average, but then moving back up over it in the last week. A lot of this has been on tech earnings. They have been really good. And by the way, a lot of earnings have come in higher than expected. I think we have earnings beats of about 77%, something like that. But the companies are doing positively, and that is a good thing. Now we wait to see what happens in the coming week. We know that we have a low down here on April 13th of $232.51, and we know that it is, I've drawn a trend line on this chart, and the SPY is certainly trading in an uptrend. Of course, it's very near all-time highs, so we can't argue with success here. It's doing very, very well. Our question now, as we move into the 3rd week of earnings, the question is, do we have enough buyers here to continue after earnings come out, say next week on Apple and Facebook, and we still have hundreds and hundreds of companies that will report earnings next week. Can these earnings beats and these positive earnings, can they continue to push the S&P 500 higher? And that is what we're asking here. So we're keeping a close watch on it. Again, it would be great if the SPY takes off and moves over $240 and moves on to a new uptrend. If it can't do that, we could see it coming back certainly to the 50-day, maybe to this trend line, and maybe back down to its prior low here at about 232 and change. Now, that's okay too. If it should come down below this $225 mark, which would be about $22.50 on the S&P 500, then we'd start to worry, as it would be approaching the 200-day moving average, which comes in just below 225 at this moment. Of course, that will change every day by at least a few cents. But at any rate, if we see the SPY for any reason come down and move below the 200-day moving average, then we will definitely start to worry. So let's keep an eye on it in this very important week that's coming up, again, for earnings and for other economic announcements, and see how it does. But now we can say, so far so good, although I would expect some kind of a market pullback to show up here pretty soon, if even just a mild short one, and that's really all that I would expect at this moment. Actually, I kind of hope it would, because it would give us some really good opportunities to get into some equities that we would like to perhaps start owning. Our next chart today is the Powershares Qqq. Of course, this is the ETF that closely follows our NASDAQ 100 index. Now, these are the big guys in the NASDAQ 100. These are the high-tech momentum stocks like Amazon, Google, Microsoft, Intel, Facebook, all of these guys. And today the QQQ, again, this is the NASDAQ 100. These are the top non-financial stocks in the NASDAQ stock market. And we know that the QQQ opened at a new all-time high again today at $136.28. So it's broken out from this consolidation that it had been going through, actually from about the middle of February, consolidating sideways through March, through April, after this big move it made back here in the beginning of 2017. So it walked right up its 20-day moving average, consolidated along it until the 20-day moving average became horizontal, and then moved higher, broke out just in the last few days, and we really do need to attribute earnings to some of this. We have support here down at 130, potential price support. We have more potential price support here at 132. Again, the Qs are trading right now at 136.02. So we want to keep an eye on the Qs to see how the techs, can the techs continue this run up? Do they have the power? Do they have the strength? Again, Apple reports this coming Tuesday. Facebook reports this coming Wednesday, and a lot more companies on top of that. If we look down here at the 14-day RSI, we see that the Qs are indeed overbought, as we would guess they would be at their current price level. This horizontal line here on the 14-day RSI is the 70, and when the RSI line moves above 70, then it is that particular asset is considered to be overbought. So certainly the Qs are overbought, and we'll see how long they stay in that territory, or if it's just getting a little overdone and they have to pull back. But do keep an eye on the Qs. And I'm going to say keep an eye on the Qs for a good reason if you intend to participate at all in this next chart I'm going to show you. Our third chart today is a daily chart of the SPDR Select Sector Technology ETF, the XLK. Now, we know that the very top components in the XLK are Apple, Microsoft, Facebook, Google, AT&T, Intel, and Visa. These are the top stocks in the XLK. Of course, it has quite a few more. Now, the XLK is the Select Sector Technology ETF, Select Sector SPDR, I should say, Technology ETF. It will always have a similar pattern to that of the QQQ. And so the QQQ is the NASDAQ 100. This is kind of, we could almost say, a smaller version of that, the XLK. I've heard a lot of people say in the last few days and even week, and of course I could join them, that they sure wish that they had gotten into Google and Apple and some of these other stocks sooner. And a lot of them now are overbought. A lot of these big technology stocks, they're dramatically overbought. In fact, they're just asking for a good reason to rest. And if we do have any exogenous shock come into the market in the next few weeks, it could be a geopolitical shock, which would be one that would be logical. Some of these stocks are so toppy that the people in them have so many profits, and of course the short-term traders are pretty fickle folks. I know I am one. Any little reason to give people to sell some of these stocks, these big momentum stocks, will be a good reason to take profits. So for those of you who are saying, gee, I'd like to get in Google, but it costs so much per share, and so forth, may want to take a look at the XLK. Again, when I captured it today, it was trading at $54.38. I told you it made a new all-time high at the open today. In Tony's Market Club, what we would do is we are going to wait for a pullback here, which should happen pretty soon. We do not have to be impatient. We can wait until after Facebook announces that could take this a little higher. And of course, one never knows. Surprises come along. It could pull it down in the next week or so a little lower. I would like to look at the XLK. If it were more down price support about the 50, say about the 53.50 area. Of course, if it moves back down and below its green line, the 50-day moving average on this screen, I would not be interested in it anymore. I would only want to be trading the XLK should it be above its 50-day moving average. So it is now overbought. As you can see on the 14-day RSI, the XLK, the RSI line is up right at the 70 line, which means it's overbought. Another reason I'd like to wait for the pullback, not get greedy here, but rather be patient, wait for a little pullback. That's how we would do it. And again, our overall story is as long as the XLK remains above the 50-day moving average, we like it. Now, if you'd like to see my comments on the market next week, please remember I am on Twitter at Toni Turner Trade. And now on to next week's economic reports. But first, please join us for Tony's Market Club this coming Monday, May 1st. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available just a few minutes after the session ends to all of our members. For more information, go to tonysmarketclub.com. For economic reports this week, we have Monday, we have PCE prices and the ISM index, manufacturing index that comes out monthly. Tuesday, we have our monthly auto and truck sales, and Tuesday after the bell, Apple will report earnings. That will move the market one way or the other. Wednesday, another exciting day. We have ISM services and our usual weekly crude inventories. And in the afternoon, we will have the FOMC rate decision for this month. So, also, more excitement. Facebook will announce after the close on Wednesday. Thursday, we have our usual weekly jobless claims and natural gas inventories. And on Friday, we will get monthly jobs numbers with the unemployment rate first thing in the morning. As well, as I said before, many hundreds of companies will be announcing earnings. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next time, keep green on your screen. I'm Toni Turner, and this is The Market Now.